Good morning, good morning, good morning. We are live. For anyone that doesn't know, my name is Malachi and I am showing my options trades. Let me just close the office door so my child doesn't come in screaming before he goes back to school this week. So, yeah. All right. We're live. This is my Tastytrade account, and what I do is I show my trades. I started doing this for some friends and decided I was just going to do it live on YouTube so they could all tune in whenever because no one's schedule really meets up. So Zoom meetings weren't really working. And I show you what I do. I show you the good. I show you the bad. Some days we win, some days we lose. And that's just the way the market is. So let's see where we're at right now. It is showing, this numbers will change once the options feeds catch up at 9:30. We're a little bit pre-market. The futures options are open right now. The spreads are still 2 ticks off, so not too bad. And this one has recovered pretty nicely today. And we have, 17 days left to expiration on that one. So I'm just letting it run. I probably should roll it out and down, but I'm being stubborn. I'm just going to let this just keep running, and we should be burning off theta on this, which is the time decay on these options values. So that's the August option on the September expiration. This is ZB's 30-year notes. This is the September option on the December expiration. I have 2 puts and a call, sold all that, and we're just letting that go. This is set to close. The call's set to close at 7, so we're getting close. And the puts not so much because it dropped down, but again, we've got plenty of time on that. So no trades there. AMD, I believe, has earnings. Let's take a look. Good morning, good morning. AMD has earnings today. At some point, I think AMD is after hours today. So AMD earning call. Let's drop this in. AMD earning call is today at, what time is that? 4:30. So right after market hours, 4:15. I don't know if I'll make an earnings play. Oh, there's our starting bell. And here we go. Looks like we already have stuff closing. But AMD has earnings call today. Looks like it's up on the expectation of earnings this morning. And as we noticed, once the options contracts dropped in, that went from being a negative to being a positive today. QQQ opened up much higher today, so we'll take a look at that. But AMD earnings call, if you are into trading the earnings, I'm going to stay out. I've already got a position open, but my guess would be the expected move is quite high. So this is the expected move for today, for tomorrow, and we're looking at 507 down to, so about a $50 expected move, a 10% possible expected move one way or the other. That's pretty deep, pretty big. But there is a lot of premium there if someone wants to trade it. I'm not going to trade that, I think. I'm not interested in gambling today. That's on the Wednesday. I did see an interesting move, which was buy the call spread for an upside at the money and then sell an out of the money naked puts to cover it, which was interesting. I think they bought, what'd they do? They bought the call spread at like 510 to 550? Let me switch that. This was an interesting, I'm not going to do it. Let me clear that out. So they bought the 510. They sold the 550. So they're paying a fee on that, right? They're paying $12 on that. And then They went out 45 days and sold two puts at 360. Or maybe might need to be 370 now that the price is up. I don't want to do that. I want to sell two of those. What if it'll let me change that? Want to sell two of those. So basically you're collecting a credit, and as long as the price is, and let's look at this. So your profitability is above 510, below 550, and you're paying for it by selling the puts out in the future. So as long as you stay above 360 into September, then it's profitable. The question is, how much profit is it? Because you can pick up profit all the way up from here. And it takes $12,000 in buying power with an expected, or with a profit possibility, I think, of $4,000 upside. Interesting trade. Not going to take it. Just not in the mood to gamble on that today. I already have a put credit spread for 3 days that is now outside the expected move. I traded that a while ago. All right, so Amazon is pulling back some, but my calls, when it does pull back on this, I sold the calls at 260. We're at 278. I just have to let that go until September. But if it pulls back, the calls gain value and the shares lose value, so I don't lose as much. And I'm probably just going to let that go at 260 in September. Same with Google. Google pulled back and then it looks like it's bouncing up. So I've basically sold those shares and got paid $400, $445 to sell those shares in September. Robinhood's bouncing up. No trade there. QQQ. Wow, all of my QQQ trades have now closed. Everything I had open, and let's take a look at what my buying power is. So I've got $60,000 of options buying power. SK Hynix. I traded the put credit spread on SK Hynix, and let's take a look at that one. It looks like it's up $82. It's been open for 5 days. And I've got it set to close if it reaches $2, and currently we're at $2.18. So that's moving in the right direction. Silver bounced up this morning. So this spread for August 7th, or this put, there's a trade right there. So silver trade. I'm going to buy this one to close at 50, and then just basically going to roll it out another week to August 12th at 50 and just pick up the premium. Well, there's not much premium there, is there? But I'm just going to do it. I'm just going to roll it out. And let's just take a look. What would this buying power be on 50? Wow, that's just $18 on 677 in a week. Not great. But it's still 2% in the week. It seems pretty low. I'm actually going to wait on that. And the reason I'm going to wait on that is I'm going to let the other one expire. I'm going to wait and see if it pulls back some. No reason to jump right in on that. SpaceX is up. These expire August 7th. I want to roll those out right now while SpaceX is up. They had a great earnings. Their earnings are today as well. So I want to take advantage of that high volatility and roll it out. So let's just take this. I'm going to buy this back for $6, and I'm going to roll it out to August 14th. And we were at 134. Let's just roll it out to 134 again. Let's roll it out to 135. So 2 contracts, I'm buying back the 134 call, and I'm selling a week out the 135 call. So I'm picking up theoretically $100 more in potential profit, but I'm picking up $360 in credit. And let's see if that fills. It's just one. So we'll let it come to me. There we go. So we filled. So there's 360 in credit that we picked up, rolling, just rolling that out and up. And if it does well, like it's still within the expected move on the earnings. If earnings do well, we'll either get that called away or we'll just keep rolling that up and out behind it. And where are we at with Tesla? Tesla's getting a little bit of a bounce up today. So we've got August 21st. That one's at 126, that put credit spread, and set to close at 50, so nothing to do with that. Now let's go look at QQQ. QQQ is bouncing up. And I only have one. Now this one doesn't have, I must have messed up. This one doesn't have an order to close. Let's take a look at what we paid for it. So the trade price on that was 74 cents yesterday. Is that right? Sold the 715, bought the 725. Oh, that's the call. Everything's closed. The call doesn't have it for August 7th. Should have a closing order. And it's going to be upside down. Everything else is closed because the market has just screamed up. Let's roll this call out a week. Or 3 days. Let's roll this call out to 8 days. So let's sell that to close, buy that to close, go out to 8 days. We were at 715, 725, and we need to make $3 to break even. So let's look at the sell the 720, and we were 10 wide on that, so let's buy back the 730. Or I want to make a little bit more than that. That didn't do it either, did it? All right, let's wait on that one. See what the market does. I don't like that very well. But let's go out to 7 days. This is my standard trade. Now we're still, even though the market's going up here, we're still got a nice volatility. The implied volatility is still nice and high. But let's run down here to about the 16 delta here. Let's sell the 690. Let's go 40 wide. Buy back the 650. $187 in premium. And that's 40 wide on 187. So total potential 187 divided by 4,000. 4% in the week. We're going to set that. We've already traded one trade today. We're just going to turn right back around and set that to close at $86. So target profit on that would be $100 on a $4,000 wide spread, 2.5% for the week. That is it for my trades. In and out, quick and easy. 10 minutes in the market. Keep in mind with trading. Oh, there's the AMD trade closed. With trading out for 7 days, you don't have to make this trade. If you're watching this later, the numbers will change, because QQQ will have moved. But I used to trade a lot of stuff. I used to trade what I called my 10 at 10, which was on a platform. I was doing it on Robinhood, where cheaper trades, but I would look at the 10 delta at 10 o'clock on the 0 day. So after most of the major market movement was done, I would run a 10 wide, so 702 to 692, makes $30, and I would trade 10 contracts. Right? So basically, I would trade 10 contracts for the day. And this is what I used to do at 10 o'clock and 0 day. But you have to be there at 10 o'clock. And then you have to manage it at 3 o'clock if something's going wrong, or in the middle of the day if the market moved hard. And that's why I got away from this trade. But let's take a look at what this trade would cost. Brent, I'll get right in there in a second. What was the cost on this platform? And that was the problem, was you're paying $20 in fees, so $2 for each contract. Where on Robinhood with the gold, it was less. So it wasn't beating me too hard up on fees. But in this case, it's basically a $10,000 buying power. You're risking 10,000 because it's 10 contracts, 1,000 wide, and you're making 277 in a day. So you're making 2% a day on that, but it's a higher risk. So instead, I moved out to the week. So Brent, right now on my QQQ trades, my put credit spreads, I go 7 days out. I always jump out 7 days. Oh, SK Hynix closed. Everything's closing. Everything's bouncing up. I go out 7 days and I run down to somewhere between the 16 and the 10 delta. Your choice, how much risk you want to put on. I'm putting on at the 16 delta, and the reason is because a lot of stuff is closed and I've got a lot of buying power right now. And so I'm just doing a little bit higher risk in this market because I can afford to do it. And then 40 wide. So 7 days out, a 40 wide spread, somewhere between the 16 and the 10 delta. I do like, again, to pick divisibles of 5 because there tends to be more liquidity and tighter spreads at those numbers. That's not always true. That's just my opinion. And so I ran the 690, sell the 690, buy back at the 650, 40 wide. And that was my trade. That's my trade for the day. If I was going to run, I really should run the call on this too. But the problem is, actually, that's not horrible, but if I run out to 735, you know what? I said that was the only trade I was going to make. Let's do sell the 735, buy back the 755. It's outside, so I'm turning it into an iron condor. That's another $100, and what you'll see is it doesn't take any extra buying power, right? It's just, you're going to pay the $2 in fees, but there's no extra buying power on this because you can't lose both the put and the call credit spread. And then I'm going to set that one to close at $60 if it gets filled and pick up an extra $60. So we sold it, so it'd be $160 is my target profit on this. So now by adding the other side of it, the iron condor on it, my total target profit on $4,000 of risk, and I'm risking less on this. If we look at this, I'm only risking $2,000 on this side. So individually, my target on this is $60 on $2,000 risk, 3% for the week. But overall, we're targeting $160 profit on $4,000 risk. So we're targeting now 4% for the week on the overall, because we're not picking up any new risk on this. We're just picking up directional risk. Did that, Brent, does that help you out there? Throw me a thumbs up or something in the chat. Anyone else that's in here that has any questions, feel free to jump in and ask before I'm going to call this a day. All right. Well, that's it, folks. That's what I've got for you for today. It's in and out pretty easy. You can run this at any time during the day. It does need to be during market hours, but the reason I went to the 7 days was because it does give you a little bit more leniency. Actually, I don't have anything out 45 days, September 45 days out. Everything's closed that I had out already on this. All those trades are closed. The volatility's still up some. let's see what would be the trade at 645, 605 maybe. So this would be a 45-day trade. Be 274 divided by 4,000. 6% in 7 weeks or 6.5 weeks. All right, I'm going to wait on that. That may be my tomorrow trade. One thing I did learn, and I always struggle with this, is I've already made the amount of money that I want today. My theta is up over 200. 200 is my target theta. My delta has pulled way back because I've closed a lot of those bullish positions. Don't overtrade. Make your money, get in, get out. Thank you very much for watching. If you do like what you see, do me a favor, click the like, click the subscribe, and I will be back tomorrow again at 9:30. Have a good day.